The morning trade from Alan Nuckman, joining us from BullseyeOption.com, is in healthcare. Alan, you're going to BMY. Tell me why.
I'm looking at probably one of the better performing price stocks in a bad sector. So if you look at the biotechnology sector, it's really suffered. It's kind of consolidating at the bottom. But this is a stock that's already bounced 20% off its low. And in the larger picture, it's been stuck trading between 50 and 70 over the last 5 years. So this $60 super support pivot is what I'm leaning on. And I know we want to talk a little bit about earnings because we're having a great earnings season. We're halfway home there. And 77% of companies have beat. But more importantly, is their revenue growth rate's 15%. So you're seeing a lot of revenue growth, and that's very positive. And this particular stock has a PE of 9.
9. All right. Well, that's a heck of a lot cheaper than onsemi. But is it cheap for a reason, Alan?
Well, I think it's a good risk reward, and that's what I like about this particular stock. Like I said, between 50 and 70 for 5 years, 60 is this pivot. Now, it's consolidated here at the 60 level between 60 and 65 for the last couple of weeks. A breakout of this range targets 70. I'm seeing some insider accumulation of this particular stock, and you know how I like to play. You know, this is a stock that is the best in breed for this sector, looking for the sector to come back, looking for a macro comeback, believe it or not, from me. The fact that we've been able to keep above 4,500 in the S&P is a very, very positive sign. We had a positive week, and the week before that we had new swing lows and a higher close. So things have set up, and now we're above the halfway point in the S&P of that drop from the top. That could set up another move to the highs, and then a V recovery target of 5,400. So there's a lot of macro upside. This particular stock, I'm looking at the June 60 call, the June option. Is in the money, obviously. It's about $650 in the money, trading for about $700 right now. It's got 4 months of time, and it's only $50 more expensive than buying the March option.
Okay, so break even at $67 here, and looking for a continuation of the recent strength. And it is creeping up towards those highs. I mean, it got blasted in the second half of last year. But with your break even here at $67, all you need is about $1.50 for the stock to move. We're at $65.50 right now. The high from August at $70. Do you bail once we get up to that level, Alan, that previous high?
I use my super simplistic exit strategy. I'll sell half my positions when I gain 50% and another half when I gain 100%. So that way, you know, what I found in my 30 years of trading, the more I think, the more I get in trouble. So if I have a mechanical exit strategy, I usually do better. And again, you just point out, from a modest move in this stock, if we get to 70, you know, then these in-the-money options are worth 10. So, you know, you can gain 50% relatively quickly from a modest move in the underlying stock. And that's the math. That's the power of these in-the-money options. And that's the math behind this. So I stick to that plan. And sometimes I leave money on the table. But you know what? It's worked out well in the decades that I've been doing this.
All right, there it is. Looking for continued strength in Bristol Myers Squibb, BMY, from Mr. Alan Nuckman. Thank you. You got it, sir. Always appreciate the